Alright, guys, we are here today. I don't know what kind of music this is. It's a little crazy to me. I don't know what this is. Hold on. Honestly, this is the craziest music. Bro, why would they even throw in music like this in the playlist? Like, that's crazy. Alright, I gotta switch to something else in genres because this is just too much. There we go. Alright. Alright, guys. There we go. That's better. What's up, guys? We are here today. What's up? Z, D, C, Be Present, Beach Bum, Nathan, Not, Ray, Blaze, Joseph, Pawn, Martin, Jimmy. What's up, guys? Yeah, I'm definitely not seeing a rally either. Usually, a Santa rally typically happens the week, like the week before the New Year's when we get one. And so I'm watching for one, but I don't see one now. Like if I pull up window markets, usually Santa rally. It's usually the week. It's like a few days. It's like the 5 days preceding the New Year, which is right now. It says the last 5 trading days of 1 year and the first 2 of the next year is when market analyst Yale Hirsch in the 60s designated them the Santa rally. Again, I'll put this up on screen so you guys can kind of see. This is what Santa rally definitely was defined as. So yeah, I'll put this up on screen so you guys can see it. But yeah, this is what the definition of a Santa rally is. Again, I'm not saying we hit one. I'm just asking. Because, bro, the problem with OBS, dude. The problem with OBS is that like I'm trying to click crazy. There we go. Okay, I can hit Control Z and just reset it. Yeah, so this is what the Santa rally is defined as. I'll put it at the very top right there. Yeah, so this is what it's technically defined as. Again, I'm not saying that's what's going to happen this year, but that's what it's technically defined as, is right up there at the top. I could also shrink this a little bit here so that you guys can actually see the symbols. And then maybe drop this a little bit here too. I'm not saying we're even gonna get one. I can see Apple up there. Nvidia's at 140 still, not really doing much. Here's the Nasdaq here. Nasdaq's down. Gold. We can take a look at gold. Gold's down as well. We can take a look at Nvidia. Like I said, QQQ. The Dow. Dow's down too. So yeah, markets are down a significant amount, man. Sound coming 2x. Yeah, it's probably just a browser issue. Alright, guys. Yeah. We're slightly red on the day on my portfolio, but nothing too crazy, to be honest. All right, guys. So markets are mostly down. I'm gonna put 3 charts up. I'm gonna look up some stock news. It's Friday, man. Next week is definitely a busier week. Next week we got like Tesla delivery numbers, but it's also New Year's. So I think Monday next week we got Tesla delivery numbers, and then we got New Year's on Wednesday. A short day, I believe, on 31st. Is the market closed? Stock market will be open New Year's Eve, Tuesday. Okay, so market's got normal hours on New Year's Eve. Yeah, so markets are going to be closed. People are rebalancing, have your pots out for the well. Yeah, I mean, we probably got a little bit of tax harvesting, which is just basically people selling some positions in anticipation of the new year so that they can have less realized gains on their taxes, is what tax harvesting is. Yeah. And so we'll see if we get one. We could get either one of those things. We could get pullbacks. Hey, Merry Christmas, Happy Holidays, bro. Yeah, looking at the Fed expectations for the next thing, right? Like January is actually pretty busy, you know. So January is actually a pretty busy time. Here's the Fed expectations. It's still pretty probable, although, you know, a rate cut is getting more and more likely. You know, at this point in time, we got 11% chance of a rate cut. 11%, you know. That's not a bad chance. That's a terrible 11. Hold on. At this point in time, we got 11% chance of a rate cut. 11% chance. We got a 89% chance of a pause here. So pretty probable that we're gonna still pause rates and then not cut them in January. But that's gonna depend on what happens in terms of like economic data that comes out. And we do have some economic data that comes out. Like this week's slow, next week is a little slow just because it's a holiday week. It's a slow week. We don't really have stuff going on. But earnings season sparks off next month. So we got earnings season sparking off next month. We got not only that, yeah, so Tesla January 22nd, at least that's when they think it's going to be. It's not confirmed yet. But we got like bank, JP Morgan earnings. We've got non-farm employment and payrolls and unemployment data coming out the week of the 6th. So not next week, but the week after that. And then next week we got like Tesla delivery numbers. We got jobless claims numbers. We've got stuff like that going through. So I'm looking at New Year's Eve. And I appreciate everybody that spent the year with me here. I really do. Like, cheers to you guys. If you spent the year with me, I appreciate it. But we got a little slow period. What's up, Doug? Please buy one Bitcoin. Your great grandkids be hugging you and thanking for it in the future. Yeah, I mean, how do you know I don't have Bitcoin already, brother? Again, I got exposure to Bitcoin at 92K on my last one. And so, yeah. I mean, I think I'm a pretty healthy person. Like, I train jiu-jitsu basically 3 times minimum a week. And that's a very cardio-intensive sport. I don't eat the best, but it's not, like, bad. I do my best. I try to limit sweets. And so, it's not that I eat terribly. I avoid certain foods. And so I don't eat horribly, but I wouldn't say it's good either, but I'll try to be healthier. Hey, thanks, guys. Appreciate it. Let me do a poll. What's up, Frostbite? Does the bull run continue into 2025? Yes or no? Does the bull run continue into 2025? Vote on that poll. Let me know. Look at the Nasdaq's gains this year. Nasdaq has had one of the craziest charts all year. But no, thank you so much for the donation, Doug. I appreciate it. Thank you. See if we got anything else going on. I'm looking at stock news as well. Again, jobless claims are out. We got some ECB decisions, maybe. We had jobless claims yesterday. OpenAI has discussed making a humanoid robot according to the information. So the week is now basically over. Again, I don't think... Oh, we got import-export price data coming out today. So we actually have the good trades balance data coming out for November today. Around 8:30. Good trades balance is basically the difference between imported and exported goods. If we export goods, it's better than importing, because if we're importing, we essentially are using like other countries' goods. And so in that regard, like we're typically negative though, which means that we're importing much more than we're exporting as a country. Like this one is expected at minus 101.3 bill. And so yeah, we're typically importing much more than we're exporting, but the margin and the ratio of that importing versus exporting is what the good trades balance is. And again, today we're expected to import, more than the ratio is expected to increase in terms of how much we are importing versus exporting, from 98.2 billion to 101.3 billion is what they're expecting today. I don't know if it's necessarily going to move markets. We can see, but we could try. And we'll cover it. We'll title it and cover it, but all right. Looking at our poll numbers, we asked people, does the bull run continue in the next year? 77% of people say yes, 23% of people think no. USA needs to bring democracy. I mean, I'm kind of against the U.S. foreign policy, though. Like, I take the approach of, like, we need to stop going around messing with other countries, Like, I don't know if there's any justification for it, and I think we're creating this bad stigma around the U.S. by doing so, by going around messing with all these other countries. We should mostly just leave them alone. Let them do whatever they want to do. Like getting into foreign conflicts and all this stuff. Most of the time, it's financially, it's like money driven. Like an example of it is like overseas in the Middle East, it's mostly like oil money driven, and like there's, I don't know, foreign policy wise. I try not to delve into politics much, but I think we should mostly leave a lot of these countries alone. Like some of our wars, most of our wars have been justified over the last like 500 years, right? But some of them are stretches. And, big business likes war to a certain extent because they make more money. And so I don't know. Yeah, Santa might be sleeping today. I don't know, bro. All right, guys, we got 45 minutes before the good trades balance data. All right, chat. Yeah, so like YouTube has those little like those interests at the top of my YouTube. I'm looking at them. Mine says podcasts, Southern hip hop. I was listening to some like 90s like Smile Empty Soul the other day. So now they have post grunge. They've got cash card games, kickboxing, martial arts, day trading, soul music, and Interscope Records. You know, I need to refresh some of those. Like, I'm okay with card games and poker showing up on my list, but some of those are just irrelevant. Like, I'm not really a big post grunge. I don't even know what that is, listener. It's because I listen to music on YouTube, and so like the music I listen to shows up in my interest, and then it just kind of feeds me more of that. But it's a pretty good mix of like rap and country. Y'all would probably be surprised to see like the mix of rap and country that I have in terms of music I listen to. I've got Mr. Big, Trial Time, you know, take that ish to trial. I've got Zach Bryan. Coulter Wall. You know. Alright. The Grinch Stole Christmas. Do we have any data today? We got import-export data. Southern hip hop. I'm here for the Southern hip hop. Listen, that's what I'm. If I encompass anything, that's clearly what I am. You know, sarcastic guys. Listen, I'm sarcastic. I'm from Baton Rouge, which is kind of like a music hub, but I listen to a little bit of everything. I've got techno too on there, or like EDM, whatever you want to call it. Oh yeah, Zach. I like EDM. I like here's the thing, all right? They give Skrillex a bad name. Skrillex has got some pretty good music. Like, people just hate on it. They don't even give it a chance, right? And he's stereotyped as, like, overplayed or kind of too much of a industry or whatever, but I like some of Skrillex's stuff, dude. Some of Skrillex's stuff's good. Like, Breaking a Sweat, the one they did with the Doors, the remix of the Doors songs. Like, some of those are good. And so it just depends. Like there's some Tyler Childers in there. All right. And then I've got a bunch of jiu-jitsu content that plays on my, you know. One of my training buddies has been getting people in this Kimura lock. He gets them in this Kimura lock. And then he basically gives up position. He like falls on his back and lets them think that they're out. And then he wraps his legs around their head and keeps the Kimura and like cranks the Kimura. It works really well. Doesn't crank it, but like catches the Kimura. Honestly, it works incredibly well. I gotta learn that. Anyways, guys, all right. Whew. Markets are pulling back a little bit, not a crazy amount. Apple was pretty much flat. You know, Apple had a big run at the opening bell and then kind of went down some yesterday. Amazon is down a little bit. Meta's down. Most tech is down slightly on the day. It's not like a crazy red day or anything like that. You know, it's not like a crazy red day. Completely, yeah. Take it to trial, or I got long hair. I got a pocket full of stones. You know, that's like a really old Southern rap song by Mr. Biggs. You know, people that are old like me might remember it, but I was like listening to that when I was like 14. YouTube showed it to me not that long ago. All right. BJJ's fun, man. It's fun, dude. All right, so we did have some Brazilian unemployment rate come out. It came in at 6.1% versus 6.1% expectation. So it came in flat. Again, we do have the good trades balance showing up sometime soon here. We got like 35 minutes before it comes out. It's definitely not as big as like jobless claims or anything, but it's important enough to pay attention to. Yeah, I know. Yeah. My daughter listens to Gravy, if you know the song Gravy. She likes that song. I listened to it with her a long time ago and she liked it. That's like the only Pimp C song that she likes, though. All right, anyways, guys, I'll talk about jiu-jitsu or music all day. Let's talk about markets here. So I don't see any big news stories of the day. I'm looking it up. I don't really see anything crazy going on today. I know we got Tesla delivery numbers next week. All right, so let's talk about some stories here in markets. I haven't even pulled up Discord yet. Maybe Pawana sent me some stuff. All right. Yeah, so Alibaba, E-Mart are going to create a $4 billion e-commerce JV in Korea. Japan's Nippon Steel extends closing date for U.S. steel acquisition. Germany's president dissolves parliament, sets national election for February 23rd. Which is a big story. So German President Frank-Walter Steinmeier on Friday ordered Parliament dissolved and set new elections for February 23rd in the wake of the collapse of Chancellor Olaf Scholz's coalition, saying it was the only way to give the country a stable government capable of tackling its problems. Scholz lost a confidence vote on December 16th and leads a minority government after his unpopular and notoriously rancorous three-party coalition collapsed on November 6 when he fired his finance minister in a dispute over how to revitalize Germany's stagnant economy. So interesting stuff going on overseas in Germany. Relief Therapeutics is rising as the merger agreement is expected to come in sometime soon. So we got a couple news stories here today. Dow Jones has now had a 5-session winning streak. Is that accurate? Let's see how accurate AI is. AI said Dow has a 5-session winning streak. It doesn't look like it today. All right. Oh, wait. AI actually might be right here for the Dow. So here's the Dow. Okay, so 5 sessions would be 1. I don't know if I can count this. 2, 3, 4, 5. I mean, it's on an upward trend. We'll just pretend it's accurate. Shares of SoundHound have surged. See, look at SOUN. Somebody showed me this one yesterday. SoundHound, SOUN. And look at this thing, man. Look at this thing. SoundHound. Honestly, it's up too much for me to be interested in it, though. Like, it's up way too much for me to buy this thing. And I know that might be, like, not the coolest take, but I'm not interested in buying it. It's up too much. This thing was at $1 earlier in the year. Like, not even that long ago in February or March. This thing was at $1. It's now at $25 a share. That's way too high. I told people this with, what was the other one that I told people this with, it wasn't C3. What was it? What was the AI company that went big, crazy? And then they didn't have their auditor walked away from it. What was that one, guys? I'm drawing a blank. I usually know this. Supermicro semiconductors. Yeah. So, sorry, Supermicro semiconductors. So, again, I told people this with Supermicro semiconductors when Supermicro semiconductors did these crazy runs here. And maybe it continues, but eventually it's going to come back down, at least somewhat. And you just want to be careful. Maybe it doesn't, right? It's always possible that it doesn't come back down. I'm not really trying to get involved up here. The time to get involved was a couple weeks ago, maybe a month ago. But yeah, Supermicro. So I'm just not trying to mess with this. It's up too much, to be honest. Frankly, it's too much. It's too big of gains here. It's up too much for me to buy it, especially. And maybe that's wrong. And maybe I miss out on some stuff. I don't know. But I'm just not trying to mess with it. We also have Boeing today. Here's BA, Boeing. Boeing's been rebounding a little bit the last month and a half. It's back up to 180, still under 200, but rebounding some here. They're garnering attention with the potential for a breakout due to a significant order for a 737-10 aircraft and a rebound in the stock price despite facing challenges from the past market share losses and quality control issues. Bitcoin. To talk about other markets, here's Bitcoin here, chat. So Bitcoin all the way back up to 97. It's looking good. Looking good. Treasury yields increasing as well. So U.S. Treasury yields have risen with the 10-year note hitting about 4.6%. If we look at TNX here, which is the 10-year yield, it's at about 4.57% this morning, 4.57%. Or no, this was yesterday. So yeah, right around 4.6% for Treasury yields. Now, you guys got to remember, Treasury yields rise as interest rates rise, right? And so basically, this is going to mean that we might see a little bit higher interest rates. And I'm looking, what did the 30-year rate show up as last time? What was the last? It shows up every week. December 13th is when it showed up. So usually they should have this out already. All right, so on December 4th, it was 6.12%. On December 11th, it was 6.67%. It should have come out again, though, right? Here, investing.com, maybe they have it. Yeah, so the last time it was December 18th. So it's every 7 days. So we should have had the mortgage rate show up again, the 30-year. Let me see. Last time it came in at 6.75%, so it was bumping up a little bit. But shouldn't we have already had a mortgage rate show up? Let me see. Maybe for the holidays they didn't release it, but typically it would show up on the 23rd. And I don't see it. So it didn't show up on the 23rd this month. So when does the next one show up? We'll figure it out. Yeah, so overseas markets are mixed. In Asia, Japan's 225 index rose by 2%. South Korea's Kospi fell by 1% amid political and turmoil. And I've got a friend from South Korea. He, and he said a lot of his money's tied up in markets there. And again, I told him I don't know what's going to happen. In general, in the U.S., we could just wait, and typically stuff will come back eventually, but I don't know those markets overseas. And I know with all the stuff going on, it's a little bit more variance there with the outcomes. So European stocks are seeing modest gains as well today. European markets have seen small gains. Shares of Delivery Hero dropped 8%. There was a blockage of a sale to Uber by the Taiwanese regulators. So looking at most modern markets here, we have had a small red day so far. Small red day so far in most stuff. Bond yields are down a little bit, which is good, right? Like yields going down yesterday are better than they're, again, if you want low interest rates, you want yields to go down too, right? Yields and interest rates parallel each other. And so when yields go down, interest rates tend to drop and vice versa. Amazon, we can take a look at that. Meta, we got Google here. Google at 196s. Where's Netflix at? Netflix is going to split sometime soon. If I could find a good entry, I'd buy it, but it's just up so much. It's up 50%. Or no, it's up 100% this year, which is crazy. What happened, Pawn? Yeah, I'm scrolling back up. Light news, yeah. Yeah, hit the live button. I know sometimes it hides certain things. Hey, what's up, Blaze? I don't know, man. See, I've heard that news that AI is going to somehow hurt Netflix. I think y'all are wrong. Like, I think that is I think that's just wrong, right? Like, I'm not saying Netflix doesn't pull back, because I think Netflix might pull back regardless. Like, it's up so much. We gotta pull back eventually. But to say Netflix is going to somehow be, like, deeply negative affected by AI is silly. Right? Like, you have to think about, like, Adobe as an example of this, right? Like, people thought Adobe would get virtually replaced by AI systems. Instead, what happened is that Adobe adopted AI and brought AI tools and systems onto their platform and allowed people to use it on their platform and create things much easier, which actually made them get more sales, more interest on their platform, not less. Right, and I think we're going to see a very similar thing with Netflix and other streaming services, in which Netflix is going to use AI to create some of its own content. Honestly, it already is. Netflix is already using AI to create content. You could see it in their new content. They're using it for editing. They're using it for all these different things. And so people are still going to watch Netflix. It doesn't matter whether AI can create cool stuff or not. People are still going to watch Netflix. And I think Netflix is smart. They're going to just adopt AI, use it for their content, and it's going to grow them faster, not cause weakness, in my opinion. But who knows? I might be wrong. I don't know. My daughter's new laptop won't boot up. Have you tried plugging it into the wall? Sometimes if the battery is malfunctioning, having the laptop plugged into a wall is what it needs to start up. If it's a new laptop, you just want to return it though, brother. That's really what you want to do. You just want to return it. Get a new one. And if it's used, there's always risk. Because like people will sell laptops knowing that like some laptops are tricky where they'll work for like an hour and then they'll cut out, right? And so they'll restart, they'll figure out what they got to do to restart it, then they'll sell it to somebody and it'll work while they're testing it. But then whenever they, come to start it up, it just kind of bricks. And I never buy used laptops. You don't know what kind of viruses, all kind of stuff could be on those things, man. You just never know. Influencers will be out in the streets too. Nah, that's not true either. Again, that's a very, look, y'all are discounting the likelihood of all those groups of people adopting AI and using it in the same way, right? Like if users are able to generate content, you don't think Netflix can produce higher quality content with AI and Sora and stuff like that? Of course they can. Same thing with influencers. Influencers are going to get a hold of it and they're going to produce more content, not less, And I think that's very clear, to be honest. I mean, my industry's safe regardless. Like, I live stream economic data, right? So my industry's safe regardless. But if we're talking about, like, Logan Paul and the likes, I think they're going to use AI to produce more, not less. And I think that's very obvious, too. Yeah. I would return it if it's causing problems, though, Pawn, while you can. Especially if you got it from, like, Best Buy. Again, when I bought this monitor, I bought this 49-inch ultra-wide Odyssey G9 monitor, right? Super expensive, super nice monitor. When I opened it up, it was broken, right? It had lines in the screen. It wouldn't start up. It was causing problems. And so I literally brought it back to Best Buy same day. Just brought it back, said, hey, it's not working, showed them. And they were like, all right. And they just gave me another one. They just swapped it completely out, gave me a brand new one, and they just said, hey, we're going to send it back to the manufacturer. They checked my history to make sure I wasn't like scamming them and returning everything. And I probably, like, in terms of buying stuff from Best Buy, I probably spent at least like $5,000 to $10,000 at Best Buy in the last year. So they know I'm not scamming them, or something like. Well, of course, no. All industries are not safe, right? Like the industries that I'm talking about. Like, listen, we can say my industry's not safe, and I think some people dislike me and disagree with me, so that might be like a pleasant thought for them to be like, oh, AI is gonna replace it. But I think you got to think about it logically and think about it in terms of how would AI ever replace what I'm doing here, right? Like people are always gonna want a real person to communicate with and chat with. It's just a different thing. It's a different thing. Like, it's much more likely that people like me are going to start I use AI every day already. It writes scripts for me. It writes all this different stuff for me. I think the people more at risk for AI replacing them, like genuinely at risk, are artistic people. Like people that are like freelance designers, editors, artists in general, like digital designers that are creating like posters and marketing content. Those guys are in a lot of trouble, because if you've spent your life learning how to do that, AI is about to replace all of that. AI is about to replace thumbnail creators. Within the next 5 years, it's going to replace thumbnail creators. It's going to replace digital designers. It's going to replace writers to a certain extent. Not everywhere. You're always going to need some writers, but it's going to replace technical writing, nonfiction writing, stuff like that. That's definitely getting replaced to a certain extent. Where it's not going to replace is it's not going to replace industries in which people want to communicate with a real person, like live streamers, like Twitch as well, like video game players that are on YouTube or Twitch or wherever. Those guys are safe because people want to communicate with actual people. And so it depends on the industry. My cartoonist. Yeah, honestly, he should be worried, Sam. Cartoonists should be worried. Digital designers should be worried. Writers, especially if it's not fiction writing, fiction writers should be worried as well. It's going to eat a little bit of their lunch too. anybody that creates things that AI can already do well, like writing, digital design, thumbnail work, editing, those guys are in trouble. And honestly, I'm genuinely looking forward to this too, because I freaking hate editing. Like, I put out the video like a week and a half ago, about some of my strategies. And I don't think I'm a bad editor by any means. Like, I think I can edit fairly well, right? And I can express what I'm trying to say and all that stuff. But the meticulousness of editing isn't understood. Like, editing something like a long 10-minute video generally is very meticulous, takes a lot of time and energy to think, and I'm okay at it, but I hate doing it. I can write fairly well too, right? Like, I can actually write decent. Like, I can write decent. I've never been much of a fiction writer, but I can explain myself. Like, nonfiction writing, I can write fairly well, but I freaking hate it. I hate it. I used to do freelance work as a writer. I hate writing. I do not like it at all. It's not something I enjoy. It's not a passion. And so I'm looking forward to AI replacing a lot of this stuff. I really am. I'm not interested in doing any of that myself. AI makes too many mistakes to completely replace any job. I think that's a naive look at it, Jonathan. And it's all good, brother. I'm not calling you naive. I just think that's a naive take. And the reason I think it's a naive take is because you're looking at it right now based off of what it can do right now. And you're using that to conclude that it's not going to replace any of these industries. The way you need to look at it is how much better has it gotten in the last year and a half to 2 years. And from somebody that uses ChatGPT every single day for a lot of different things, software development, everything, it has gotten exponentially better in the last year and a half, right? It has gotten so much better in the last year and a half. Now, think about how much has gotten better in the last year and a half, and then extrapolate that over the next 15 years, right? It's going to get way better than it already is. It's going to get so much better, right? And that's where it's going to start replacing a lot of these industries that, again, live streamers should be safe. And who knows if I'm doing this in 15 years anyway. I mean, I hope I am, but, who knows, man? Who knows if there will even be manual trading in 15 years? I think that's a more likely, like, people saying it's going to replace stuff. I think it's more likely to replace manual trading altogether versus replacing, like, me as a streamer anyway. Machine learning will certainly get better. It already is. I mean, you got to think about it in terms of, like, what the base that it's working with. And now the base has grown. And so it's going to be working with a newer, higher scale base, and then it's going to build on that, and then it's going to do it again and again and again. And it's just going to get so much better. And it already has. Again, ChatGPT 4.0, it's getting better. Like, the newest version of ChatGPT is so much better than the one I first used a year and a half ago. From a programming perspective, right? Like, I used to be able to say, hey, do this, do that, create this, create that, and create a Python script that does ABC, right? And AI, when it first started, would spit out spaghetti code, like, just not great code. It was okay, but it wasn't great. I would have to change it and fix it and organize it and write notes and do all these different things, right? Fast forward to today, and I could tell it to do ABC in Python, and it'll write notes for me now, right? It'll say, this is what this component does. This is what this component does. This is what this one does. All these different things. And it works first try a lot of the time. Not every time, but it's certainly gotten way better, and that's going to continue. And I think that's the lens you got to look at it under, because it's going to get better. Yeah. Yeah, I mean, maybe it replaces some, but you got to think about it like this, right? My industry of finance is that I'm mostly live trading, right? We're giving out live trades. We're giving out, like, what we're interested in, what we're doing, live news, all that different stuff. And that could certainly be replaced to a certain extent. But I think people want, and you guys let me know at home, right? Like, I think most people that watch my live stream here, they watch it so that they can hang out with somebody and not feel so lonely in the markets, right? Like, they're getting up, they're looking at markets anyway, And they can analyze stuff and they can trade, but they want somebody that they want to hang out somewhere with people, right? That's what most people are doing here, is that they want to hang out with people, right? And so, sure, you could replace with an AI host. They're going to not, most people are going to choose the real person every time, you know. Maybe you got a small percentage that would want the AI guy, but most people are going to choose the real person. Hey, congrats, Ride. Nice, brother. Why use it for coding in Python when you can tell it to write machine code directly? I mean, because I know Python, and so I can problem solve Python code if something's wrong. Same thing with JavaScript, right? React Native, PineScript, ThinkScript, you know, like those are mostly the languages I use, and the databases that I use. And so I'm just sticking with what I know. Right, for sure. People are just trying to hang out with somebody. Yeah, but you're looking at it in terms of a model, though, Guy and Van. It's different. I'm not an OnlyFans person, dude. Again, sure. But, again, I just, maybe I have confirmation bias, but I just don't think stuff that I'm doing now is going to get replaced by AI hosts anytime soon. Not to where it's going to meaningfully affect me, you know, right now. If anything, AI has helped me so far build more stuff. But maybe, I don't know. Alright, so Bitcoin up a little bit again today. Let's see if we can tap 100K. I thought Bitcoin would consolidate in the 90s for a while, and so far that thesis has been correct. We also have gold. Again, gold struggling. What's silver? Is it SI? Yeah, silver down a little bit. We got like Vanguard real estate. When we're looking at real estate's had a weak year. I know real estate's had a slightly green year. It's pulling back though, so let's see what happens there. Google's had a great year, almost at lifetime highs still. Apple's been breaking lifetime highs as well. Supermicro semiconductors, AI related stock had a bad turn down, bad dip. Right, this is social interactions, 100%, right? And that's what I'm trying to say. Like, most people are here to interact socially and make the market feel a little bit less lonely. At least that's what people tell me, right? They're like, hey, man, like, I get up, I trade every day. You know, you're helping me not feel so lonely in stocks. And that's good. You know, that's what I'm here for. Honestly, y'all are helping me feel less lonely because I got somebody I can talk to. I'm going to watch the market anyway, you know. Yeah, and that's all good and fine, William. I mean, we already have stuff today that can source news and everything like that. We have bots already that can do that. But my interest in viewership on my channel has grown year to year, and that's because people want somebody to hang out with, right? Like, that's the point of this. Now, some of them may prefer to hang out with AI, but I think if they had an option of real person versus AI, you know, they're going to choose the real person. So you can't read binary? Well, not really, no. Yeah, I really genuinely think that it'll help my content more than it'll hurt it. Yeah, for sure. And I think one day we will get sentience in AI, man, you know. Like, during Christmas, I was talking to some family about, like, the future. I was talking to them about the simulation theory, about how, you know, like, so you got to look at it in terms of like we are already creating simulations, and our AI systems are getting to a point where eventually those simulations could create their own simulations inside those games, right? And so you have to think about if, if it's actually more probable, if it's possible for us to create virtual reality that is similar to what we currently experience out of our eyes and ears now, then it's more statistically probable that we're already in that simulation. And then the question is, how many layers does it go deep, right? Like, if it's possible now for us to create simulations that also create their own simulations and their own worlds, right? How many layers deep do we go? And I think it's a weird thought process, and it'll mess with your head too, where you start to believe that people, then it starts to get weird where you're looking at like people and you're saying, hey, are these guys real or are these software? And again, I'm not saying I believe any of that stuff. I just think it's fun to theorize on it. And then you go to like the law of attraction and you look at that and you say, hey, that might mean the law of attraction works, because if we are in a simulation, it might be reusing data. And so I'm not saying I believe any of that stuff. I think when we have big numbers in anything, you're going to get coincidences, and people are always going to think that coincidences are some type of deeper thing, but it's not always the case. Anyways, Apple, rip it up, guys. Lifetime highs sitting at 259s right now. Dipped down a little bit, but the Apple lifetime highs, I'm watching this one close today. The Apple lifetime highs are right here. So we're going to watch this at the opening bell. We got 6 minutes before import-export data. I don't know how big import-export data is going to be. Yeah, I mean, maybe, William, right? But again, I think still, even if you have AI capable of that, people are still going to choose the real person because they understand that they're actually real, right? And they want real social interaction, not simulated social interaction. And that's the difference, right? They're going to pick the real person, even if the real person's more flawed, because they want somebody to hang out with. And they could create their own version of AI and hang out with that if they really wanted to. And so there's no purpose, Yeah, quantum computers. Yep. Yeah, it gets deep. Yeah, AI, the big thing AI is doing is extracting data, right? Even like Tesla, right? We're looking at Tesla. Speaking of Tesla, I haven't looked at it this morning. One thing Tesla is doing is extracting data. That's one of the big values in Tesla stock, is the data that it currently has. Look at this kind of like U-shaped pattern here too on Tesla. I'm not saying I'm interested in buying it, but look at this U-shape right here. That's interesting enough, right? We got a U-shaped pattern on Tesla. We're watching it. Yeah. Yeah, I've told the story of my daughter and I was trying to buy my daughter minutes for her cell phone. I've said this story 1,000 times on this channel, so don't get mad at me for restating the story. I think it's relevant to the simulation theory talk that we're having. So I'm trying to process this, and for whatever reason, every time I hit process on her phone, it says, oh, we hit a snag. And it says this over and over and over again, and every time I'd process it, my daughter would say it's not going to work. She would be really negative and like pessimistic about it. She'd be like, hey, it's not going to work. And every time we tried, it didn't work, right? So I stopped her eventually. I said, hey, no, we're going to be positive about this next one. I was like, the next time we press the button, it's going to process and everything's going to go smoothly. And she's like, okay, it's going to work. It's going to work. We hit the button. We tried like 10 plus times prior to that. Didn't work. We say that, we hit the button, and boom, it processes the very next time, right? And so it kind of freaked us out a little bit, to be honest. But I think that's, somebody's talking about going to seeing people in the store and going into the parking lot and where people are parked next to them. And, I think coincidences are going to happen in life, right? Just because you have so many instances of everything that you're going to have coincidences. And people are going to latch a deeper meaning onto it. It doesn't necessarily mean it's true, though. Anyways, all right, guys. So here we go. We got the data dropping in about 3 minutes. Good trades balance. Again, the good trades balance is the difference between how much we're importing, which is not seen as a positive thing, versus exporting. Like if we export our goods to other countries, it means other countries are using our goods and so forth. That's good. If we're importing other country stuff to our country, it means we need to use other countries and we're dependent on them to a certain extent. So that's bad, right? But at this point, the discrepancy is a minus 101.3 billion imports versus exports. And that's the good trades balance data that drops in about 1 minute here from now. 1 minute good trades balance data drops. We'll see what happens. I don't think this is going to move markets at all. I don't think this is going to move markets at all, but maybe it does, right? We don't freaking know. Maybe. Right. All right, guys, here we go. We got 30 seconds here, 30 seconds. And we got 15 seconds here, chat. Again, I don't think this might move markets. I don't think it's going to. We'll see. We'll see if it holds or something. I don't know. All right, here we go, chat. And here's the release. There's the QQQ. Let's watch it. And there's the report right there. I don't think it's going to move anything. Good trades balance came in higher than expected. More imports versus exports than expected at 103, basically. 103 billion. Minus 103 billion, which means that we are importing by a greater margin than expected versus 101.3 billion. Basically, it came in at 103 versus 101.3, so about a little bit more than expected. A couple billion more than expected here, imports versus exports. And the market didn't really move, as I told you guys. Let's see what the Dixie did here. Yeah, so the Dixie pulled back a little bit on this. Dollar index pulled back. Q pushed up some. I'll put this up on screen. Again, it's roughly minus 102.3 billion. Versus 101.3 billion expected. Yeah, we 102.86 billion. All right, so and again, you can see it's a greater negative number when we're importing more than we're exporting. I'll put this up on screen here. It's not a huge release, but it's something. Yeah, so we put the good trades balance data up. There you go. Let me stretch this a little bit more. All right, so that's the good trades balance data. Yeah, I don't know if it's really make or break numbers here. It's not really going to influence markets in a super heavy margin. Maybe, but yeah, guys. Also, if you want to check out Top Step, we're going to day trade on Top Step right now, basically. We're going to start to day trade a little bit here. We got the Dixie Super Micro Semiconductors up there. I'm going to put Top Step up. We made some money yesterday. And again, if you want to day trade with me, Top Step gives you a demo. Test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, the base one is $49. It's not the end of the world if you lose for the base one. If you pass it, you get a 50K funded account with a 90% split. And in the futures market, you can trade the S&P, the NASDAQ, the Dow, the Russell, gold, currencies in some ways. A lot of pro traders trade futures because there's no PDT rule. You can day trade basically the SPY, Q, price action, gold, some currencies. So a lot of Forex traders should be trading them. The patterns are very, very similar to like blue chip stock patterns, but there's no PDT rule. And so it's a great way to learn how to trade as well, because if you were going to pay for a demo account with real-time data, it's going to be in the same ballpark as the base one on Top Step anyway. But if you pass the test, like, you got to make 3K in profit without losing 2K first, following their rules and conditions. If you pass the test, they fund you 50K with a 90% split. You get to keep your first 10K as well, which is similar to funding your own account. But if you fail, you're only out $49. And so it's the best of both worlds. It's limited risk, similar reward if you pass the test. And again, you want to confirm all this stuff with them. They're an affiliate of mine. I'm biased in their favor because I get paid. But I genuinely think this is good for traders. It helps them learn how to trade with limited risk. It's a perfect like middle ground of pressure for traders. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Also understand I'm terrible at this stuff and I have no idea what I'm talking about. You want to confirm all this stuff with them. Not an investment professional. They are an affiliate of mine. I am biased in their favor for sure. Understand all this stuff, guys. Not an investment professional. But if you do sign up, use Top Step X, there's zero commission, right? So I can make $16, $12, $5, still net profit on these trades because of no commission. And that's a huge edge, the biggest edge in funding, in my opinion. And I'll put the link up right here. If you want to check it out, there's the link. Yeah, the good trades balance data is in the yellow above us. Now, look at the 200 exponential here, guys. The 200 EMA does move stuff, man. Look at that. So the 200 exponential does move stuff. All right, well, the Santa rally finally come now. Yeah, Tesla dipping down. I wonder when Tesla's going to break 5. Dude, my nose is so stopped up, dude. All right, guys, so look at the market dump here, Chad. Look at this drop here. Wow. So that 200 exponential is a powerful level here that you want to watch. Yeah, look at that. Look at that dump here, chat. Wow. We also had wholesale inventories, but they're not a big report either. Look at that drop. Let's see if there's any catalyst here for this. Yeah, so we had the good trades balance. Retail inventories. Nothing big, though. None of this is really huge. It's a big drop. Part of me wants to short this or at least buy the dip. Let's try it. We're going to buy this dip. It's a risky thing. Again, we take one contract here. Still net profit mostly on Top Step X because there's zero commission. I'm going to add to this now. There we go. Took half off. Cut out the rest there. So we just made a little $15. A little $15 gain. I'll take it. Christmas is done. Let's stop speaking about Santa rally, please. I mean, you got to understand, when we say Santa rally, guys, originally a Santa rally was, so you got to think about what it actually is, right? I think a lot of you guys don't understand. So in general, a Santa rally was originally dubbed it, and it was meant to define the last 5 trading days of the year plus the first 2 trading days of the new year, right? And so in this regard, the Santa rally would typically happen Wednesday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, or Tuesday, Thursday, Friday, because the market was closed Wednesday. So Tuesday, Thursday, Friday, Monday, Tuesday. So that is when it was typically a Santa rally, right? So, yeah. And then also the second and third. And so Santa rally was the last 5 days of the year, trading days, when markets are actually open. And again, I'm not saying we're going to hit a Santa rally. Like, nobody's saying we're going to hit one. It's a question we're asking, and a question's fine. You know, like, you shouldn't get upset about a question. If you are, you might be a little bit too strict and emotional about things. Yeah. Yeah, it's the last 5 days of the year. That's when we typically get Santa rallies. That's what I'm asking. Will we get one today? I don't freaking know. I'm not saying we do. Nobody knows. Yeah. I mean, I wouldn't mind a rally, but I'm not. I think the market's up a lot. I told you guys already. I think we correct a little bit next year, personally, but I might be wrong. Don't copy me. Not an investment professional, but I think we correct a little bit next year. No, you guys don't think we're gonna correct next year? Do you guys think we're gonna get strength into the year? Or no. 74% of people say yes, the bull run continues into next year in the votes. Out of about 550 votes, 26% of people said no. Interesting. All right, so look at this low break here. We're trying to break this low again. I don't know what I want to do. Yeah, for sure. I mean, I'm not going to say it's that. It's just into 2025. I don't know. Yeah, I definitely don't think we're going to run on next year. I think that would be crazy, but who knows, man. Do we correct means do we have a deeper bear market next year? Not all year, but for 2, 3, 4 months, do we have a bear market next year is what I mean. Do we correct? Do we drop? Do we correct and have a bear market for at least a few months in which we drop more than 20% in stocks and, you know, finance in general is what I mean by correction. Well, I think everybody prefers them to be different. At least you should. Right? It's better when split governments are typically better, in my opinion. Well, always long-term stuff's going to go up regardless, you know. All right, so we're starting to head up a little bit. I should have held on to that long position, but it's okay. I'm not emotional, just don't need the market to just keep going up. Need some good fluctuations. I mean, I feel you, but you know, you getting upset about the Santa rally thing shows you're a little bit emotional about that want, right? You want the market to pull back a little bit, and so, you know, because of that, you're getting kind of emotional about me using the term Santa rally. And it's all love here. It's all good, right? But yeah. I believe a 5% correction will happen. 5% is nothing, though, right? Like 5% is genuinely nothing. Like market's up 100%. Or is it? Wait. Is it really up 100%? I think I did this math last week. So if the SPY went from... Yeah, so here's the year. This is basically the year. So the SPY went... Let me see. So the SPY went from lows of 466 all the way up to 601 this year. Market's up 30% this year, 30%. If we look at the last 2 years straight, where here's 2023, we were at 378. And this is the SPY, right? Yeah, so the SPY is up about 60% in 2 years, averaging about 30% a year. Averaging about 30% a year. The QQQ was at 260. It's now at 530. The QQQ, the NASDAQ basically, is up 104% in 2 years. That's crazy, man. Honestly. And again, like I say this, and I'm like a freaking broken record here. But again, and time has proven me correct with this, right? And so you get all these people that want the market to correct and crash, and they call me a perma bull, and they make fun of me, and they've been doing it for years. And during the years in which they've been saying that, the market's gone up, the NASDAQ at least over 100%. And so it really goes to show, guys, that if you find yourself on that, like, look, man, you might think the market needs to correct. You might think it needs to pull back. You might think the market's going to crash. You might think whatever you think. The real winner here is dollar cost averaging, right? DCAing, buying periodic buys regardless of price every specific time interval is the way. And it's how you make money in finance and markets long term. And, investing is key. It's king. It's what you should be doing. And people who are sitting out waiting, never touching it, never investing, never putting their money in, always worried about a market crash, are just getting left, unfortunately. And again, maybe that's why they're so emotional about it. But again, like the definition of insanity is continuously trying the same thing, expecting a different result. If you're not investing your money, listen, the market might correct. It might crash. It might pull back. That's, again, an inevitability. It's going to happen eventually. Regardless of that, if you DCA and, honestly, I'm not telling you what to do. I'm not an investment professional. I might be wildly wrong. Maybe the market crashes tomorrow. I have no idea. But if you dollar cost average, and again, the people who lose the most in crashes are people who get emotional and sell. The people who gain the most from crashes are people that get interested and buy in those big moments. And so, there's a very, very famous quote, and the quote goes, time in the market beats timing the market. You can always try to time the market perfectly so you can avoid the crashes or pullbacks or whatever, and that's good and fine. But the consequence is that you're going to miss out on some of the biggest gains like the market's shown us over the last 2 years. And I just don't want to miss out on that. So DCAing is your friend. It curbs some of that volatility, and everybody should understand this. Yeah. All right, so market popped up. We got the dollar index up there. What's your take on Intel? I think their processors are good. But I thought it would bounce back a long time ago, and it hasn't. And so for me, I'm not really super interested in it. Maybe though. We'll see. All right, chat. Y'all see my new watch, man? I'm excited about this watch. Look at that thing. Look at this thing. I wanted a watch that I didn't have to get nervous about wearing so much. And so, check that out. Can y'all see it? Is it upside down? No, it's not. It's an Omega Seamaster. It's the 007 one too. Check it out. It's got the 007 spiral at the bottom. That's cool. All right, guys. We're going to trade a little bit, but market's slowing down after breaking down a little bit, so I'm not really confident in either direction right now. We got to just sit and wait. Yeah, exactly, Bobby. Correct. Depends on where I'm going. All right, dollar index is breaking down too. Typically, the stocks and the Dixie have an inverse relationship a lot of the time, but not always. All right. RGTI. What do y'all think of quantum computing? So where's quantum stocks gone here? Here's QTUM. Are they still increasing here? I wonder how early we are with quantum though computing. You know, like I'm wondering how early we are with quantum computing stuff. Yeah, I don't know what those are. That's cool though. I'm a watch guy. I like watches. My dad was a watch guy too. Defining DCA. Yeah, so dollar cost averaging is, it's as the name suggests, it's averaging. Okay, so an example would be, let's just say this is a long-term chart. It would be buying 20 shares here. And let's just pretend that each one of these represents a week in markets. So it'd be buying 20 shares here, 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 right? And averaging to a position long term, right? And sure, in this instance, you're going to lose money. But when it starts to go like this, like the whole point is long term. Like, and what I would, the preference for me is index funds, NASDAQ, S&P, Dow, maybe. I'm not a big fan of the Dow necessarily, but you could invest in the Dow too. The Dow does okay as well. Maybe a little bit of gold, right? Maybe you can handpick some stocks. Maybe, you know, there's a lot of stuff you could do. Maybe real estate, like whatever you want to do, it's just averaging into things. And if the whole point of this is that long-term stuff goes up, like if the long-term trend of a chart is like this, right? And this is what a crash looks like long-term, and this is what a crash looks like long-term, then dollar cost averaging is your friend. You know, you're going to be up huge long-term in it. It's making periodic buys regardless of price and specific time intervals. That's what dollar cost averaging is. And it's what you should be doing. Again, I'm not telling you what to do, not an investment professional. I might be wildly wrong about anything and everything I say. I certainly would never do this in penny stocks, never do this in mid-cap stocks, because mid-cap stocks can go from 50 to 0, in 2 years. Never do it with mid-cap stocks. One of the biggest ways people lose money, and I say this a lot, but one of the biggest areas people lose money in when they're investing specifically is they treat mid-cap stocks like they're Apple and Amazon, and they keep averaging into them, but those are not the best stocks to do it. Like, again, a mid-cap stock can go up a huge percentage or it can drop a huge percentage, and that's not what it's meant for. Like, the way you invest in those type of stocks is you take a little bit of money that you're okay with losing and you stick it in those stocks, to where if you lose it, it's not the end of the world, and you're trying to take advantage of, you might lose more than 50% of the time, but when you win big because they grow exponentially. That's the strategy, I think, that's the best strategy for like medium-sized, mid-cap, not legacy companies, like relatively newer companies that are more volatile and risky. Is with that said, never invest in a penny stock under $5 a share. In my opinion, right? You should never be putting your money in penny stocks. There's this huge market pumping them and pushing them to retail traders. If you look at them, 9 out of 10 of them fail. But yet people treat them like there's some, like everybody thinks their penny stock is going to be the next big thing. And most blue chip healthy legacy companies were never ever penny stocks. It's not like most penny stocks. It's not like every big company was once a penny stock and somehow they just grew to be a blue chip stock, like a Pokemon, right? In fact, it's the opposite. Most healthy blue chip companies were never ever penny stocks. They IPO'd and they were immediately $10, $20, $30 a share, big market cap, And so don't get stuck falling for that retail trap. And that's a trap that rookie retail investors fall into, because they get greedy. They think that, Yeah. No, I'm not talking about day trading. I'm talking about long-term investing. Day trading, continuously adding to losing positions, is risky. I would just be careful. DCA is honestly a technique for trading. Wrong. Dollar cost averaging is a long-term. Dollar cost averaging is an investing strategy in which it curbs volatility. Like, if you're worried about the market crashing, or if you're worried about the market being weak, you can average in over long-term and it just accumulate. Is what the name of the game there is, accumulation. You're accumulating shares. And so instead of going all in at $100 or 100 shares or 200 shares or 500 shares or whatever, you can instead take 25 share increments of dollar cost averaging strategy and slowly edge into that position to get a good average regardless of volatility, right? Regardless of up, down, you're kind of averaging in. And if you spread it out long enough, right? Like if you spread it out long enough, like once a month you do it, then it's even less volatility and you're even more protected from it, and you can better capitalize on long-term gains is what it is. So that's the way. But again, maybe I'm wrong. I don't freaking know. My account automatically buys SPY every Monday at 9:30. Yeah, regardless of price. That's a DCA strategy into the SPY. Irregardless. Nobody ever say irregardless again. John, if you can't sleep at night because of your positions, that means that you are in the wrong direction. I sleep like a baby, brother. How hilarious it is when they pulled the plug on the internet. And yeah, but why would they do that? Never trade minis? Who said that? I mean, you can trade minis if your risk tolerance is up there with it. I trade minis occasionally. Right, irregardless is not a word. It's regardless, right? You can't... Irregardless is not a word. They added it to the dictionary because people used it so much, but it's not an actual word, right? Like, they just kind of humored them and added it to the dictionary. But if you say it in front of people who know English, they're going to frown at you and say no. People use it to sound smart, right? Irregardless, but it's not an actual word. The real way is just regardless. Like, I'm going to go to the store regardless of the snow outside, you know. I'm going to drive to the park regardless of the rain on the ground, right? Like, it's just regardless. It's a pet peeve of mine. Irregardless is not a word. Yeah, definitely top 3 linguists in the world right now. And irregardless is not a word. I did the calculation just for this year. If someone bought 25% every month, and next year it goes up by 8%. So you're saying 25 shares every month of what? 25% every month? I don't think you should add 25%. That's a lot. You know, I think you should do it smaller. Personally, I would never do it that big. I would buy the SPY maybe, or the, you know, there's other examples of the S&P 500 ETFs. But long term, you're going to make so much money from this, you know. And the point is that you would be averaging in on those dips as well, right? If we drop 8% and you're averaging in on those dips, it curbs volatility, you know. Yeah. Well, there's slang, bae, bro. I use bro a lot. Any thoughts on... If you can't beat them, join them. Yeah. All right, chat. All right, we got 30 minutes until the market opens. Chat, 30 minutes. I am going to be on Top Step TV at 1:15, I believe, today. I think it's 1:15. Let me look. So I am going to hop on Top Step TV later. Bro, the amount of people that email me trying to be my thumbnail creator is exhausting. I swear, I get a new thumbnail person saying, hey, guys, let me create your thumbnail. And they just spam, and they spam, and they spam, and they spam, and they spam. Eesh. Enough. You the OG, bro? Hey, thank you, man. If you DCA in, are you DCAing out? It depends on your plan. It really depends on your plan, right? Like, when you invest in certain things, especially like the S&P or the NASDAQ, in theory, you're supposed to hold it forever, and it can build generational wealth from it, right? Like people like to hate on the market, okay? Like, here's the thing. Like, people like to hate on the market like it's a bad idea. Usually, they're just biased. They're just incredibly biased, right? But let's look back at some actual statistics here. In general, the S&P will give you about 10% a year on average, and that includes when we crash and correct, about 10%. Right, and which means that on good years, like the last 2 years, it's going to do much more than 10%, i.e. NASDAQ did 104% over the last 2 years, averaging 52% a year, 52% a year. So, and that's on good years, right? And so on bad years, it's going to be bad, and on good years, it's going to be really good. But regardless, let's just look at it long term, and let's say you've got, 200K. We'll do 200K. And let's say you make about 10% a year over a 10-year period. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, that 200K is going to more than double. It's going to be about $520,000 by the end of that 10-year period. You go to 20 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to be over $1 million. All right. And so, we could act like dollar cost averaging is a bad strategy. We could act like, somehow investing in markets is a bad idea. Like, anybody in the chat can pretend whatever they want to pretend, but, time kind of proves that wrong. And again, I'm not saying, I think we might correct a little bit next year. And so personally, I don't know if I'm going to DCA as heavy into next year, to be honest. I think we're up just too much. We're up too much for me to do it. My point is, and the reason I'm getting into this conversation again, which I kind of get into every day, because I think if people can take anything from my stream, they need to understand this. over everything else. They need to understand this, right? So the reason I'm saying this over and over again is so people can understand this. But if the reason I'm saying this is because over the last 4 or 5 years, so many people have made fun of me for being bullish. They've called me a permabull. They've said the market was going to crash. They said the market was going to correct. They said all these different things. And in the last 2 years, the market has done 104% in the NASDAQ. And so the overarching point is time heals a lot of wounds. And if you're willing to hold markets long term, you're going to make money. You're going to make money. You're going to combat inflation. You're going to build generational wealth. You're going to accumulate wealth if you do it, right? And at the very least, you're going to hedge against inflation long term. It's not 100% guaranteed definitive, though. We could always have some craziness that's never happened before happen. But in terms of probabilities, that's relatively low. It could always happen. You never know with the geopolitics and all that stuff going on. You never actually know. But in those situations, you got bigger problems than your stock's not playing out, you know? So in the end, just don't be one of those guys that overpredicts crashes, that misses out on the biggest statistical edge the market ever gives you, you know? And with that said, I think we might correct a little bit next year regardless of it. So to be fair, if they didn't bail out or SVB and Signature, I can assure you it wouldn't be looking like it is today. Right, but that's coulda, shoulda, woulda, you know? Like, yeah, sure. I mean, but is that really relevant? I don't think so, you know? That should honestly give you more confidence in it, not less. If you know they're going to bail out the failures anyway, should give you more confidence in doing that, not less. But again, what do I know? Top 3 worst trader or investor of all time ever in the world. Markets are breaking lows right now, chat. So markets are breaking lows. Let's watch this support level here. And I might buy this support level up. Let's see. All right, we'll buy a little bit here. We'll add maybe 2 to 3 contracts on the dip. All right, we got 2 now. All right, we took half off just to protect it so we don't have to worry too much about it. And then we might add back. And we got the bounce. Didn't really get big enough size. All right, so we just got out for another $15 gain. I'll take it. I like that support bounce there. And it worked. So. No, I don't sell courses. I don't even claim to be good. I don't do any of that stuff. I'm just a resource and community for economic data and trading. So, not even claiming to be good. I don't want any of that stuff. What I usually do when I got cash sitting is I put it in like the T-bill. Like T-bill will pay you about 5% annually, paid as a dividend payment into your account, regardless of price. So if I'm gonna leave money sitting, this is usually what I do is I just leave it in this, and I earn a monthly dividend and about a monthly 5% dividend. So if I'm gonna So let's say I put 30K in there month to month, and it's going to pay me about 5% annualized, which is about $1,500 a year divided by 12. It's going to pay me about $125 in a dividend payment monthly. And so it's going to pay me over $100 monthly if I park my money there. And then the good thing is, like, it's liquid. So if I want to sell it, I could sell it and not worry too much about it. It's not the most liquid thing. Like, ideally, it's going to be better to wait for it to hit the top to sell versus the bottom of the range, like here. But there's some more nuances behind it. There's some fees and stuff. But in general, like, if you're just sitting on cash, another way to kind of hedge against some inflation and stuff like that. So. All right, guys, we got 23 minutes until the market opens. 23. Alright, guys. Is the money locked? Yeah. I mean, it's tied up. It's so T-bill is an ETF, right? So it's an ETF. It's an exchange traded fund. So it's kind of like holding it's kind of like getting a dividend payment monthly from a specific stock. At any time you want, you could always unload and get your money back, you know. Yeah, it's a proxy for T-bills, basically, correct. Right? It's a Treasury bill ETF. Yeah. Robinhood Gold pays more for cash. Yeah, sure. There's other ways. Like, you can find 5% basically anywhere you want. You could get a certified deposit, a CD. You could buy actual Treasury bills. You could buy T-bill ETF. You know, you could do your Robinhood 5% for leaving your money there. Like, you could do a lot of other stuff. I'm more confident in this, though, in terms of sticking my money there. I'm not really the biggest. I don't trust Robinhood like that, you know. Dollar General is in the butt. I'm not a big fan of DG, though. Yeah, so I've been telling people this, dude. Like, Dollar General seems like a really risky buy. Like, think about it like this. You want to talk about companies that are obsolete? Dollar General is freaking obsolete, bro. Like, look, man, before people could order things online and get it shipped to them same day or next day, Dollar General served a purpose. And I've been saying the same argument for years. If anybody watches my stream long enough, you remember me spitting this argument at you. The problem is that nobody needs to go to Dollar General to buy things. The products are not $1 anymore, you know? And so they're essentially useless, right? Every time I go to Dollar General, nobody's there. It's a ghost town. Now, maybe some small towns where they don't have that many stores, the Dollar General's popping, I don't know. But I know for me, this is one of the first companies that's going to go out of business. Dollar General, Dollar Tree, I don't think any of those are really going to be around. I think rent's expensive. It's going to cost more. I can't see them, like, you got to put I think about it like this, right? So let's say Dollar General does $200 to $300 in sales every day, right? Let's say they make 30% of that daily, right? Let's say they make 30% of, so if they do $200 in sales, 30% would be $60 in net profit a day. Now, think about how much they got to pay cashiers, keep the lights on, like everything like that. I just think that Dollar General is going to fail eventually. And if it's not already doing it, let me look at the dollar. Let me look at the DG Mart. Let me look at their EPS graph. Honestly, they make more money than I thought they did, though, dude. Look at this. Honestly, maybe I'm wrong here about Dollar General. I don't think I am. I think regardless of whether the revenue increases. So this is EPS. This is earnings per share. So the EPS isn't bad, but look at their growth here. Look at their growth down here. Look at this growth. That's not good. And I think that's going to keep getting worse. You also, let me look at Dollar Tree for the same thing. Or let me look at their revenue graph actually. Honestly, kind of a shocking revenue graph here. What am I missing for Dollar? Look at their revenue increase here. Maybe I'm wrong here. You know, I just don't think. I think my story on them is correct, but I might be wrong. And the revenue certainly shows that I could be wrong there. Let me see. Let me look at Dollar Tree. Yeah, Dollar Tree too. Interesting. Maybe it's just my own specific area that does weak. I don't know. Dollar General is a ghost town in small towns too? Maybe. You called Warner Bros. A ghost company at 7? Yeah, I mean... I don't know if I called it a ghost company. I think I probably said I don't like it. Because I don't. Listen, guys. I'm certainly going to be wrong about a lot of stuff. And maybe these are some that I'm wrong about. I have no qualms about being right every time or anything like that. But there's just certain companies that I just don't like investing in. It's not even that I think they're like bad. It's that they're too risky. They're too risky. So like maybe they work out like Warner Bros. I just don't like them. I'm just not going to invest in them. And that's okay. You don't need me to agree with you about everything. And again, it shouldn't make you guys emotional, to where y'all are being disrespectful or anything like that. Like, it should be okay for me to disagree. I just don't like Dollar Tree. I think the standard of having dollar stores is going to change. And I think it's going to be cheaper and more efficient to buy things off of Amazon over a long period of time. But they might pop up in between then. They might go up before they go down. I might be wrong altogether about them, and that might certainly be true. It doesn't matter either way. Again, I'm not going to invest in them. And if you do and you make money, congrats. It's not like I'm shorting them. I just don't like them long term. I think they're risky. I think the standard of dollar stores is going to change. And over time, we're going to see more and more commercial businesses like that fail. But maybe they have some bull markets before that. I don't know. %5 risk-free is way better than those two companies. Yeah. I don't know, man. Dollar General has been pretty weak at 126. Dollar General's down a huge percentage since their earnings came out in August. And so I'm not touching Dollar General. And I usually like buying weak stocks, but I'm not a big believer in Dollar General. I genuinely think the standard of dollar stores is going to change long term. But who knows what's going to happen short term. And when I say long term, I mean over the next 10, 15 years. But they might, like I said, they might have some runs leading up to it. I don't freaking know. Warner Bros. I don't even remember talking about Warner Bros. Necessarily. Or no, I don't even remember talking about Warner Bros. Much. I know I don't like it, and I know it's risky. But if I did talk about Warner Bros., I'm trying to think of what encompasses Warner Bros. Let me look. All right, we got 15 minutes into the open. I'm going to trade a little bit more actively after the open. Yeah, I don't know if I ever talked negatively about Warner Bros. So Warner Bros. Makes up Lord of the Rings, Conjuring, Harry Potter, The Matrix, DC, the Lego movies, Scooby, Aquaman, The Flash, Big Bang, Friends, The West Wing, Looney Tunes, Batman, animated series, HBO Max, like Game of Thrones, Succession, Euphoria, The Last of Us. Yeah, Warner Bros. Is going to keep killing it, man. I'm not skeptical of Warner Bros. At all if they own those media assets. I remember talking about Discovery a little bit, but even still, Warner Bros., if it owns Game of Thrones, Succession, Euphoria, The Last of Us, those are some of the biggest shows right now. I like Succession, I like Game of Thrones, I like The Last of Us. Never watched Euphoria, but those are some of my favorite shows. They own some games too. So Warner Bros. Is definitely not. I'm not super pessimistic about Warner Bros. Either. You don't want to buy a company like SOUN because it's too high. You don't want to buy DG when it's a value discount, but want to buy the SPY at all-time highs. Yeah, no, I said the Matrix. Yeah, I mean, 77, listen, I like what I like. I don't like Dollar General because I think the standard might change. It's not just about technicals. Like, you're only talking about technicals here, brother. Right? And again, I think it's, like, you could disagree with what I say. That's fine. But you're only mentioning technicals here. I'm talking about fundamentals mostly. When I invest in things, technicals are cool. Fundamentals are king. All right? And so what I like personally buying up, if you want to know what I genuinely like to buy, right? I usually like to buy healthy companies. I'm not buying the SPY up here either, chat. I think the market might correct. So I never said I was going to buy the SPY at lifetime highs. What I said was dollar cost averaging long term is your friend. Generally, I am waiting for larger pullbacks to enter some stuff. But yeah, I don't like Dollar General because I think Dollar General is not going to be around in 20 years. And so investing into that company doesn't make any sense to me, right? Because you have to think about how commercial industries have changed, and I just don't like that. I think it's going to be obsolete in 10, 15 years. And maybe I'm wrong. I certainly could be wrong. I don't think the market is going to... I think we might pull back a little bit next year. And so I'll probably enter a bulk of my long-term investments when that happens, or I might start DCAing before that, regardless of it. Yeah. I don't like Sound, SOUN, because look at it, bro. Like, this thing is up crazy amounts, Like, this thing is up, like, percentage-wise, right? Like, even if we just look at percentages, let's see, percentage-wise on the year, this thing was at $1.62. It's currently at 24s. So it is up roughly 1,400% in a year. Okay, so yes, you're correct. I don't want to buy that SoundHound. It's a mid-cap company, right? So it's a company that's too new, that hasn't been around that long, and that it's up 1,400%, sir. And so, yep, you better believe that is not a company I want to buy. Again, people didn't learn from Supermicro. Same people were saying, oh, Supermicro is great right here. Like, same people were saying Supermicro, and it looks a lot like Sound did. They were saying the same thing about Supermicro right there, right? They're awfully quiet now. And so, listen, we can believe the hype and buy up every stock that's up 1,400% in a year. There's a difference. There's a difference between buying the SPY right now as well, right? Like, you could buy the SPY right now. It's almost certainly going to be safer than buying Supermicro semiconductors. It's almost certainly going to be safer than buying SoundHound right now, based off of how much it's up on the year. And again, it might succeed, right? It's big risk, big reward. So if you're right, you'll probably make crap tons of money from this thing. But if you're wrong, you're going to lose big. And that's a lot of variance. And I'm not really about that variance in my account. Like, one of the names of the game in trading and investing is account preservation. And we can gamble on stuff like this and try to get rich and look cool on the internet. But that's not really what I'm about. And, yeah. And maybe I'm wrong about Dollar General. I don't know. New kid on the market is Netflix. Yeah, Netflix is up huge too, man. It's up like 100% this year. I'm not really interested in buying Netflix right here either. I'm not buying up much right now. The only way I'm going to buy up stuff, we got earnings season in January. If we have some big corrections in earnings season, I might buy some stuff up then. But I'll probably just wait until that happens. But again, guys, listen, I trade how I trade. You could like it, dislike it, or you could like it, dislike it, agree with me, disagree with me about certain stocks and trades and investments, and it's all good. It shouldn't matter. And that's going to be the truth with everybody. We don't have to agree on everything. And if you get mad at me just for stating an opinion, you're probably just a little emotional about your own positions, and that's okay. DG is the new Kmart, maybe. All right, guys, we got 7 minutes. All right, so here's Apple. Apple's around lifetime highs. We'll see what it does here. We're gonna watch that Tesla. Everybody's watching Tesla to see if it can break $500. It's at 450s roughly now. Yeah, no, Netflix is getting into live streaming, and that's a huge industry, a huge niche. It's one of the reasons they're up so much already is because people recognize Netflix is getting into live content, and I think that's a perfect move for them. They should be getting into live content. They're the biggest streaming service in the world. They should be getting into live content, and they are, and I think that's the future. And they're going to start streaming sports and fights and boxing and live events of all kinds and concerts and all kind of stuff, and I think that's going to make them grow even more. Does the Dixie correlate with tech? A lot of the time the dollar index goes up, Dixie moves down, or markets go down, but it's not always a perfect correlation. It depends on economic data and a bunch of other stuff. All right, chat, we got 6 minutes. Netflix needs to fix their live streaming issues. Well, I mean, Tyson Paul was a trial run at live streaming. And so they had the whole world tuned into that. And so, their servers were probably overworked, but they're going to build the infrastructure around it. They're going to learn from it and build the infrastructure around it. And so that's what's going to happen. All right, guys. So market's still dipping down a little bit. I'm going to wait to trade. We got less than 5 minutes before the open. So we'll stick around and see what happens. And again, if you want to check out Top Step, link is I'll put the link up. There's no PDT in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stock patterns. No PDT rule in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Patterns are very, very similar to blue chip stock patterns. On Top Step X, there's no commissions. Tiny amount of fees per trade, so I can make $12, $3, $10, $16. Still net profit on almost all of those. Great way to learn how to day trade because Top Step is a middle ground of pressure. They teach you how to trade. They give you a demo, and they test your skill with it. If you can make $3K in profit without losing $2K first on their $50K demo for the base package, they fund you $50K, 90% split. You get to keep your first $10K in profit as well. And so the split is similar to funding your own account. And they've paid out over $150 million in the last 4 years. They fund thousands of traders, been around for over 12 years, and the price of that base one is $49 a month. So it's kind of like a souped up demo account where if you pass it, you get funding and you can potentially make money from it. But if you fail, like most day traders do, most day traders lose money. If you fail, you only lose $49. And in the futures market, again, you can day trade basically the SPY and Q price action. Patterns are very, very similar to blue chip stock patterns. I wish I'd traded futures earlier than I did because I lost thousands trying to fund my own account in stocks. And the futures market's so similar, it doesn't matter. Great way to learn how to day trade. And Top Step is the most legit one in the world, although they are an affiliate or sponsor of mine. I'm biased because I get paid by them. This is one of the top 3 plugs in the world right now. Shameless plug. And now that I'm done selling out, if you want to check out the link right there. Great way to help support the channel. Understand all this stuff on screen right now. CFTC 4.41, hypothetical or simulated performance have limitations. I do trade off stream. I certainly lose off stream sometimes. You're not going to see all my trades. I'm one of the top 3 worst traders ever. If you copy me, you'll lose money probably. So don't copy me. Market's still breaking down a little bit. We're at 863s right now, chat. 863s. Yeah. I mean, that was like my second or third plug of the day for hours of streaming. And so to say, oh, you're really pushing that platform, I mean, dude, I plugged it maybe, what, twice today? That's my second time all day. How long we been streaming for? We've been streaming for 2 hours. I don't think one plug an hour is really pushing it, you know. I mean, but hey. I certainly get paid. And I do this to make money. I mean, listen. This isn't I would love to act like this is the kindness of my heart. I'm just here to help people. I just like teaching, guys, I could say, but that's certainly not true. I don't spend 4 hours a day plus here because I just like teaching. That's just not true. Most people on YouTube do this to make money, and that's okay. I'm providing a service. We cover economic data. We trade live. We report market news. So I would say, you know, if I had to designate it something, I would say it's one of the top 3 value services in the world right now, especially in finance, you know. But let me know what you guys think. Would you make it top 4, top 5? Did you trade pre-market? Yeah, we traded. We made about $30 in pre-market. Small little cushion here. Market opens up in 30 seconds. Ricky knows. I just like teaching, guys. I'm not going to trade. I'm going to sell you guys courses on how to trade. But I just like teaching, so I'm just not going to trade, but buy my course. This is not me. I'm making fun of somebody else. I just like teaching, guys. You know, I'm not going to trade. I'm not going to do any of that risky stuff. I'm just going to sell you a course on it. I'll just like teaching. No, guys. I'm going to go take a bunch of pictures, though, and make it look like I'm traveling the world. All right, guys. Anyways, market is open right now. There's the market open here. Let's see if we can hold. All right, look at that support bounce right there. All right. Did I even change? I don't think I changed it. Yeah, let me switch this. All right, guys. So pre-market is done now. So pre-market is done. Let's cut pre-market out of here. Yeah, we're gonna day trade market. We gotta wait at least 10 minutes, or at least yeah. Sure we got. There we go. All right, so we're consolidating here. Tesla dipped down and then pop back up. No, we don't really have any economic data today. Not really. Yeah, not really. I mean, we got crude oil inventories later. But yeah, not really. All right, look at this dip here at the opening bell here. I still got to wait at least 2 minutes to the opening bell for this to pass. Somebody's mad I'm in a tank top, dude. Listen, I can't help it. Like, I got a robe on. In fact, I'm going to put on my robe, dude. It's cold. My wife is one of those people who, like, in order to sleep, she needs it, like, abnormally cold. I love her. She got me this robe for Christmas. And so, I'm going to Big Papa it up right now. Because it honestly is kind of cold. Alright. I'm going to Pimp C it up, you know. Alright, guys. So, We're dropping down a little bit here. Look at this big dip. This is a big red move. I'm gonna buy this now. Maybe get punished here, but hopefully I don't. There we go. It looked good for a second, and then it did not look good. Come on, retrace back up. You know you want a rebound market. Come on now. There you go. Up there. I'll probably hold the rest break even now, I think. All right, we're going to cut that, take a little gain here. Slow and steady wins the race. Slightly green on the day. We got a little cushion. Probably need to up my size a little bit here. These are a little too small. We're only 4 minutes into the opening bell. What is abnormally cold? 64. Yeah. You think it's perfectly okay to watch what you want to invest into and not buy? Is that a question or a statement? Is that a question or a statement? Lambert mustard shots. Yeah. I didn't do the mustard shots. Look at the market dump here, guys. Wow. Are we going to get a Santa dump is what I'm going to call it. Look at this drop. All right, we're in 2 contracts here. Let's see if we get a little pop up. Give it to me. Here, there we go. All right, we're out. Caught a little baby bounce. We'll take it. Slow, steady gains. Look at that little pop. Yeah, it's a big selling pressure. I'm in Nike right now. I'm actually green on the position. We bought it a couple of months ago, or a couple weeks ago. All right, so Tesla testing lows. Apple breaking down as well here. Look at Apple. Apple got down to 256. Question is, do you think we're going to rebound back up? I don't know. Let me see what the SPY's doing. We also got to watch maybe Nvidia here. Tesla's dumping down under the lows of pre-market. Nvidia's falling down too here. We got a decent cushion on the day now. I'm gonna buy this dip. There we go. Okay, just made another $30. Very quick. Yeah, so for all those that don't know, I hate mustard. When I was little, my parents, when I would do something wrong, you know, they didn't go the classic soap in the mouth. They went mustard on my tongue, and I hated it. I hate mustard because of it. And so we used to charge people for push-ups. We charged them, I think it was like 50 cents a push-up. And so they could donate, make me do push-ups, make me take mustard shots. This was a long time ago. All right, guys. Look at this dip here. When do you guys think it's time to buy this? The OGs, remember. Yeah, so we're up basically $100 today so far. Why not short the dip? Because it's a little too dippy for me here. And I think the more we drop, the more chance that we bounce back eventually. It's catching a falling knife, so it's kind of a risky thing. I'll probably just chill now and wait. Our accuracy's got to be pretty good today. Let me see what my accuracy is. Yeah, today my accuracy is 100%, dude. We have not lost once. Check this out. Not once today so far. 100%. 9 trades, no losses. I'll take it. AMD's up a little bit. That's good. It's nice to see. Kind of needs it, you know. Where's Bitcoin at? Bitcoin dipping a little bit today. Kind of slow. Yeah, it's definitely the dippiest dip I've ever seen. Yeah, I remember those days. All right, guys, look at NVIDIA dump here. This is what's dragging the market down. Again, I stopped buying it because I don't trust it. It's starting to get really weak here. Look at NVIDIA fall. A little volatile, to be honest here, man. All right, guys. Yeah, yo, hit that like button, hit the subscribe button. You know you want to try chat. Do it one time. Might feel good. Try it now. Honestly, my channel's grown a little bit, to be honest here, guys. The channel's grown a little bit. Yeah. You'd love to see it. Yeah, I'm my hands are off for now, man. I'm just not gonna mess with things yet. And I think Tesla delivery numbers come Monday. Yeah, so Tesla's supposed to report delivery numbers next week. I think it's on Monday, right? Reports circulated on Monday that Tesla, yeah, on or around January 2nd, actually. That's gonna be next Thursday for Tesla delivery numbers is when they're speculating. I thought they would come out Monday. Tesla's trying to, okay, so we'll watch it. So is it time for bouncing here? I'm going to take one contract small and see if we can just ride a bounce back. Such a big range here though, man. It's like, I don't know if I want to buy this dip too. It's a big drop. I'll take a risk and add to it, see if we pop back up. But it's definitely a risky play here. I'm playing with the profit that I've made already. You don't love to see it. Testing these lows again. Ugh. Catching a fallen knife here again, but I want to let it try. It's all right. A little bit risky here, but that's okay. See if we can give it some time. Yeah. Looks like he's going to crack lows again. I want to see if it cracks it and then retraces and it's just a liquidity grab though, but I have to be very careful here. We've already got a big cushion on the day, so we're kind of flat after this trade if we lose, but hopefully it rebounds back up and retraces is what I'm looking for. Sometimes we'll get like a crack of the low and then we'll retrace all the way back up. So that's kind of what I'm looking for here, but I'm not really loving life here with this. A little stressful. There we go. There we go. See if we can. All right, so we got 4 contracts here. I'm going to take half of that off just to protect the profit that I have in the account. We got our bell set back to basically green on the rest. And yeah, we'll hold the rest. We're still green on the day now after this too. I could also double down and add, but let me see what I want to do here. All right, so we added to it too. See if we can pop back up and help us. I think short's a little bit too obvious here, to be honest, but maybe I'm wrong here, and it's definitely risky. Nah, my mistake. Yeah, not really loving it, but we're gonna have to cut it and take another swing. I still think it might retrace back up. I think it's gonna start to slow down. Where's Apple at? You don't love to see it. Let's see what I'm actually. So honestly, we're not really down that much on the day. Luckily, we had a cushion built into it. Yeah, it's just breaking down too much. We're gonna have to wait and recalibrate our trading, I think now. I still think we're gonna bounce here. Hey, see you, Sam. Have a great day, brother. We'll take another push here sometime. I still think we're gonna bounce. Dude, I barely freaking missed it. We'll jump right back in and take some risk. I'm trying to trade larger size on this account. We did our testing phase on it, but I think we got to start taking some swings on this account, but I also don't want to get too emotional just because I lost. There we go. All right, we took half off there. I'm being quick here with this. There we go. All right, took another piece. We'll add to our winning trade here. Took another piece off there. Lock that in. Get some more. All right, so we just made a chunk of that back. You know, I was honestly absolutely correct about my bounce position too. I just missed it. But I think if I have to fix my entries on that type of stuff is what it is. Now look at 257s here is what I'm looking at now. I just want to see what Apple does. I think I'm gonna buy 1 contract and then maybe I'm gonna start adding to winners instead of losers. If I can, I think that's probably a better strategy for this type of trade where it's a reversal trade, where I can see if I can get into the green and then add deeper into those, take more risk once I'm in the green is what I'm looking for. Yeah, I'm looking at Apple is what I'm looking at here, guys. I think Apple's gonna rebound some more. There we go. All right, we took half off. Took another half off, just locked in another 40. Doing okay, not down much at all on the day. We'll see if we can fight our way back now. I was looking for this reversal and I'm still confident in it, but I see Nvidia and Apple start to rebound. The question is, does Apple, I'm gonna slow down some right now though, because the question is, does Apple reject this area here, this volume weighted average price right here, this purple line? We also have it right here on Nvidia. Oh, dude, so my reversal was on point. A little FOMO, but Yeah, there's the big rebound. It just depends on what we do right here. I see Nvidia popping back up. I'm gonna short this now. Take the other direction here, see if we correct a little bit now too, but it's risky. I just need a little bit of a dip. But I take half off, so I don't have to worry about it if it's big. I'll add a little bit to the short. We got that big support level above us now. Alright, now we're back to flat. There we go. Alright, took half off. Bad fill? Or no, they gave me an okay fill. Alright, so we just got out of that, another green. So we're right about our little short coinciding with this level here. We'll see if we can fight our way back up. And again, we're on Top Step right now. So if you want to day trade with me, you can check out the link in the description. We're trading on Top Step. I'm gonna short that too. Took half off there again. Slow and steady. Cut that now too, another $15 or so. And then we are gonna take some size here if we can. Yeah, we're in 3 contracts. Take a little piece off. There we go. Beautiful. All right. Yeah, we're flat on the day now, perfectly flat, so good. You know, we missed this. We took our risk at a bad spot, I think, and we ended up getting ourselves in the hole, and now we're kind of fighting our way back from it, but we're reading the market fairly well now. We thought we would reject right here if you look at it, so like right here. We thought we would reject off of this spot, and we did. Look at that rejection. We shorted it. We were going long up to this point prior to that. And now I see like another downturn in markets. Like the Nvidia could still, it depends on whether Nvidia and Apple both here bounce. So like when you look at these, you got to watch this level here, and you got to watch this level. Oh, bad, terrible drawing. You got to watch this level here. And so if these start to turn and move down and break lows like that, it's going to drag this down like this. If these bounce right here, and instead like Nvidia goes like this and makes another retest, it's a much more optimistic bullish look. And if it bounces here and starts to go like this, again, it's a more optimistic look. But at this point in time, we don't know. We just got to wait and see what it plays out. I'm not one to want to take a trade here because I think the momentum can spark in either direction, to be honest. Yeah, look at that sound hound. Yeah, sorry, Larry. I'm doing my best, bro. I'll try to talk it in the mic. All right, so we're bouncing back to retest that level. It looks like both of those are finding some support. Look at this level here. I'm watching this level. Yeah, and listen, guys, I trade small. Like, I'm not going to take crazy amounts of risk. I'm kind of a trading wimp anyway. Especially day trading, I'm a huge wimp when it comes to it. I'm just not a big, you know. I like to diversify. right, we're gonna take 3 contracts here. There we go. We started to break down and now we're bouncing. Let's see if we rip down a little bit more. We'll add some to this too. All right, we'll take our second risk on the day. Like big risk. See, we flush. There we go. Nice. All right, so we just made we're now green on the day. We just made another $50 scalp there. We make anywhere between like $10 and $50 a scalp usually, sometimes more. But that last one we made about 45, so we'll take it. Green is good. We're green on the day now. Got ourselves back to the green. You can kind of see the green change right here. And so we're now green on the day. Pretty good accuracy today too. I mean, we took a crazy amount of risk on one trade and lost. But then we fought our way back up. So our win percentage today, we've had 26 trades. All right, 26 trades. Or no, we've had 31 trades. We've made money on 26 out of 31. We've lost on 5 of them so far today. And again, there's small gains. We trade a lot, but we're running about 84% accuracy today, which is good. I'll take that. Green is good, but 40% or 84% accuracy is very good. I'll take it. And again, if you want to check out Top Step, link is in the description. I'll put the link up one more time. This is my 3rd plug of the day. If you cry about it, you'll be okay. No PDT run features. The reason I can take these tiny little trades is because Top Step X has 0 commission. And so again, Top Step gives you a demo, test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. In this case, the base one's $49. You pass the test, you get a 50K funded account, 90% split. You get to keep your first 10K in profit on that account. And there's some other rules you got to follow. You fail, you're only out $50. It's the best of both worlds. Limited risk, you pass it. Very similar to funding your own account in terms of split. No PDT roll in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Even if we look at the Top Step website here, guys. So here's the rules of the funded account. You got to think of it like a souped up demo account. You really do. You got to think of it like a souped up demo account. Top Step has paid out over 150 million. Look at this, $156 million since 2020. They've been around for over 12 years. They funded almost 90,000 accounts. It's just a great way to learn how to day trade, right? Like most day traders fail. Here's the rules. I'm in a 50K funded account, so I passed this test here. I had to make 3K without losing 2K while following these rules. I passed this test. It's $49 a month if you use my link. And it's just a great way to learn. You know, most day traders lose. Tons of resources too. The thing you got to understand is like, it teaches you how to trade, right? They have all these different like things. It just teaches you how to trade, right? It genuinely helps you learn how to trade. You got to follow rules, and it helps your real trading too. And so for $50 a month, I would say it's a pretty good deal. All things considered. And I think if you were going to buy, like I said, if you're going to pay for a demo outside of this with real-time data, it's going to cost somewhere in the ballpark. Might cost a little bit less, but not by much. And so I think the value's clearly there. And again, if you want to check it out, they're an affiliate of mine. I'm biased. You want to confirm all this with them, understand these rules. Again, this is my 3rd plug of the day in about 2.5 hours. So averaging a little bit more than 1 plug an hour, I think is fine. But yeah, I understand all the stuff. I'm biased. Top 3 most biased in the world, they say. But yeah. I don't know what I want to do now. I'm slightly green on the day. We've had a good string of trades today so far. And it's Friday, you know. I forget it was Friday. It doesn't feel like a Friday, but it is. It feels like a Monday or Tuesday, but it's a Friday. We don't really have any other economic data coming out today, you know. I would just be careful today. Bitcoin's down. Look at Tesla. Tesla's down. We look at Apple. Apple is slightly red. We're looking at Nvidia. Nvidia's red. You look at Amazon. Amazon's red. You look at Meta. Meta's red. You look at Google. Google's red. You look at Netflix. Netflix is red. You know, every major tech company is red. Mag 7 is red. Microsoft, red. So y'all just be careful. Be careful. AMD, flat, but mostly red. So yeah, y'all be careful, guys. I don't know what we're gonna get here. We got some extension on the downside. I'm watching this 741 level in the NQ. But yeah, I'm gonna get out of here. So hey, I love you all. Y'all have a great day. Y'all be safe. Again, it is a slower day. It's a holiday week, you know. Y'all just be careful. You guys red or green today? Let me see. Yeah, everybody have a safe and happy weekend. Thank you, Faye. CR. What's up, William? Doom, Blaze, Drew, Happy. Yeah, I don't know about a Santa rally. We're slightly green, but again, we're slowing down too much for me to be interested in. We're 30 minutes into the day. I'm going to get out of here. Y'all be good. Y'all have a great day. I am on Top Step TV today at... I am on Top Step TV today at 1:15 Central Time. So I'm only at 1:15 Central. I think. I'm pretty sure it's 1:15 Central Time. Yep. 1:15 Central Time. So 2:15 market time. All right, guys. I'm going to bow out. I love you all. Y'all have a great day. I'll see you guys later. Y'all have a safe and happy weekend. Top 3 worst trader of all time. I'm out. Later, guys.